words. Higher time frame candles versus lower time frame candles, right? So this is really important when you're trying to execute trades, right? This is important in a way that, let's say when you're looking at the 4-hour candle, you're looking at the 4-hour candle and you're like, okay, well, I expect the 4-hour candle to continue moving bullish, and now I want to jump down to the smaller time frames, and I have to figure out what do I need to see in the smaller time frames to execute on the higher time frames, right? Or how does the smaller time frame candles, they create the higher time frame candles? This is the most important part of trading which you will face. Now, once we go into these examples, please don't ask what if this, what if that happens, or what if this happens, and because those are, then once we start talking about what ifs, then there are infinite number of outcomes. So we're just going to talk about what's presented to us. So let's say we have a 4-hour candle right over here, and this 4-hour candle is broken down into 4 1-hour candles, right? So for the 1 hour, for the 4-hour, we made a low, we continued going up, and then we made a high, right? For the 1 hour, so you had 4 1-hour candles, 1, 2, 3, 4, that formed the overall 4-hour candle. So the 1-hour candle started from the bottom, and now we're here. So started from the bottom, it went up, right? So you see how this was the main volume of the 4-hour candle, right? This is the main volume of the 4-hour candle, and after this, the 1-hour candle moved up. You saw that, so you would expect the next 1 hour to continue moving bullish, and you would say, okay, the 4-hour has to move bullish. But since you're waiting for the candles to close, you're looking at the candle here. This candle closed a weak bullish candle, right? What does this mean based on volume? We talked about volume. If you guys have been making notes, I want to know what this means based on volume. Leroy said low volume. I hope he's correct. Well, I guess only Leroy knows the answer out of 300 people here. Awesome, perfect. Indecision, low volume, that's good, right? So guys, listen, I need some interactivity, so now when we're going to go in examples, I'll need a lot of interactivity to keep me engaged, or I'm going to get bored. Perfect. So you had a candle close like that, which meant that there's going to be less volume here now, right? So you're like, okay, we're going to wait for the next one. Next one also closed with less volume. You're like, okay, and then the one after that, it made a high, but it closed like this. I don't know where to message. Oh, if you're in YouTube, you can just measure it in the chat in YouTube, or you can message in the or you can message right over here. Yeah, there are a bunch of questions in the question answer box here on Zoom. I'm probably going to answer them at the very end. Okay, so perfect. So this is how the 4-hour candle closed. So you had a high over here, which was the high over here, and low down here, and which was the low down here. So just looking at how these candles are formed. So let's move on to our next example here, and let's see what we have in store. So next we have, this is the 4-hour candle, and this is the 1-hour candle, right? So just by looking at the 4-hour candle right now, can someone let me? Where's the chat box? Okay, right here. Right. So can you? What's the probability of the next 1-hour candle to go down? It's pretty high, right? Because the 1-hour candles, they kind of like it was bearish. This was kind of like this. This was like a doji candle. This finished bearish like this, closed below these candles. And the 4-hour candle is bearish. So if we're expecting the next 4-hour candle to continue down, which means the next 4 1-hour candles need to form in a way that they will continue moving bearish as well. So if we move forward, we'll see that, okay, 4-hour candle did indeed move bearish. Now we want to see what did we want to see on the 1 hour for it to move bearish. So this is how the 1-hour candle formed, right? So if you notice, the first 1-hour candle, it went all the way down over here and it retraced and went and came all the way back up. The most important thing to note about this is that how the candles were making lower highs and lower lows. Right? Can you guys see the lower highs and lower lows? It's very important. For price to continue moving bearish, it has to make lower highs and lower lows. So this candle eventually closed like a doji candle. So this means that candle opened and closed at the same point. But if someone entered sells over here, they probably took profits here and would have left a runner. Now we see the next candle, 1 hour candle. Notice how it has no wick on the top. Right? So when a candle is bearish, and it has no wick on the top, what does it say about volume? Is there a lot of volume in the bearish sense, right? Yeah, it's very high volume. Now I see, like, guys are interacting and I'm loving it, because that's what we like, interactivity. And then you had 2 1 hour candles. This had a lot of volume. This closed like a doji candle, and this closed like a small bearish candle, right? So now we essentially broke down that one solid 4 hour candle into multiple 1 hour candles. This is where, if you're in a 4 hour candle trade and you see a 4 hour candle go down and then go up, because when this 1 hour candle formed, this went down and then it went up. So what it meant with the 4 hour was that the 4 hour went down and then the 4 hour went up. So if you were only looking at the 4 hour, you must have been like, oh man, like this candle went down and now it's coming back up. So I don't know what's going on. But when you're looking at the smaller time frames, you're like, okay, well, it's still making lower highs and lower lows. So for the 4 hour to continue bearish, you want the lower time frames to continue making lower highs and lower lows. Could you look for support? No, we're not talking about supports, resistances. We're not talking about Fibonacci's, harmonics. We're not talking about, no, we're only talking about what we're talking about right now, right? This is very important. We're just talking about this instant right now. That's it, So this is how you're mainly breaking down the smaller time frames to see how the higher time frames are building up. If you think the higher time frame will continue moving bearish, then you need the smaller time frames to continue making lower highs and lower lows. If you think that the higher time frame is going to go bullish, you want the lower time frames to continue making higher highs and higher lows. Someone asked, isn't the long wick a price rejection? It is. It is a price rejection. But if we're looking for price to continue going bearish, we are looking for this candle to respect the high of the previous candle, which is why you're placing your stops above the candles. Once you took a sell when this candle formed, your stop is up over here. This candle moved down, you bring your stop above the high of the candle. When this candle forms, you're bringing the stop over here. When this candle forms, you're bringing the stop over here, right? Because it's going down. So you're bringing your stops above the highs of the candles. Makes sense? Because that's the bearish trend. Last 4 bearish together with different correct beginning to end bearish. Yeah. Oh, yes. Look, Juan said the right thing. He said that if there was a support formed, there would have been a bullish candle closed. All right. So let's move on to the next example here. We have a lot of examples. Isn't this the doji we ignore? We're not going to talk about that right now. That's a little advanced concept. I'm probably going to, in 2 weeks' time, I'm going to create like a better, well-versed webinar on doji candles and stuff like that. So we're going to cover those topics then. All right. We have another 4 hour candle and we have 4 1 hour candles, right? So now take a look at this. When this 4 hour candle was bullish, when it was forming bullish, at one time it went bullish like this, and then you had candles going like this bearish. Now notice how these candles are leaving wicks, but they're making lower highs and lower lows. This is a lower high, and a lower high, and a lower low. So just based on the 1 hour, it does seem like price can continue moving bullish. Someone asked, how are these going to help us execute trades? Again, all your questions are going to be answered. I don't know why people are asking questions right now. When I announced in Slack, don't ask questions in the middle of the webinar because it's a very streamlined webinar. It breaks my focus. So let's just continue on and all your questions are going to be answered. Right? This is just for your understanding purposes. Like, come on guys. Seriously. Okay. Now, the thing is, you can't take trades without learning the candles. You know, right now we're just learning how candles move. Once we start learning candles, then we're going to talk about how you can start taking trades. That comes later on. So right now we're just learning candles. So let's have some patience. This is why, you know, people don't have patience when they trade. You need to have patience. So let's look at the next 4 hour. The next 4 hour went extremely bearish. Now we want to see that, okay, how did this 4 hour candle go down on the 1 hour candles? This is how it went down. So now if you see that candles were making lower highs and lower lows and they continued to move down. Right? So whenever you're looking for sells, you're looking to see that, okay, if I'm going to look for sells at this point, let's say if I'm going to look for a sell at this point, I want candles to respect the previous high. So when you're looking to see, okay, how am I going to execute a trade? You are visualizing a trade, right? You're visualizing, you're creating a bias. So before this 4 hour candle formed, you're creating a bias to say that, okay, my bias is bearish because the 4 hour is bearish here. If my bias is bearish and if I want to take a sell, I want my stop to be above the 4 hour candle and I anticipate the next 4 hour candle to continue moving bearish. You know, but now when you break it down to the 1 hour, let's say if someone trades the 1 hour, then they'll say, okay, well, maybe if I want to take a sell right now, I'd want my stop loss to be above this candle and I'm going to be executing over here. Executing trades is really, really hard. Why? Because you don't trust yourself. And you don't trust yourself because you haven't seen things happen over and over again. That's the most important part. So you need to get really good at executing trades. If you think that price is going to continue moving bearish, then you would know, if you've been making notes, you would know that, okay, what's the first step? The first step, okay, what's the first step? Can someone tell me what's the first step? The first step. The first step, someone said it is... Someone said identify a trend. That's wrong. First step is to identify a stop loss. First step is to always identify a stop loss. Whenever you're going to take a trade, first step is you're always saying, where is going to be my stop loss? So if you're looking for a sell in this situation, you're asking yourself, where will be my stop loss if I take a sell? If you take a sell, your stop loss is going to be above the candle, because if you're looking for sells, you're anticipating candles are going to make lower highs and lower lows. Basically, you know, because if you're looking for sells, you're anticipating price to continue moving bearish, make lower highs and lower lows. And for price to move bearish, you need candles to respect the previous high, like this here on the 4 hour, and then right over here, lower highs and lower lows, right? You're always marking down where your stop loss is going to be, right? If for some reason, let's say this candle here, it starts breaking the high of the previous candle, let's say like this, then your sell is invalid. This is why you're identifying your stop loss the first thing that you do. You know, whenever you're identifying a trade, you're identifying where your stop loss is going to be. So let's move on to the next example here. We're going to have a lot of examples here on basic trades as well. So we're going to put someone on the spot. All right. So this is what we have, the 4 hour. Now, just by looking at this 4 hour candle, do we know where price is going to go? I don't think so. No, we don't know where price is going to go. We can't really execute a trade. We don't know where price is going to go. But if we look at the 1 hour, can we agree that on the 1 hour we have a support forming here? Right? Because we had a bearish, bullish candle here, then we had a bearish candle, and then we have two bullish candles. So you're like, okay, well, if this is the time I'm coming to the charts, we have a support forming here, right? So maybe the 4 hour can go up, maybe not. We don't know because there's still some sort of a like a minor resistance forming here, so we might want to wait. So let's see what happens as the next 4-hour candle forms, right? So the next 4-hour candle goes bullish. Okay, so let's say that we went out for a bathroom break, or we went out to get groceries, to stand in a line due to COVID-19, whatever, and we come back and we see the 4-hour candle went bullish. And you're like, oh man, I was looking at the 1 hour, it was ranging, I missed the trade. And now you have to ask yourself that, okay, how could I have caught this trade up? Because the 1 hour was ranging, 4-hour closed like this, and there was no confirmations. Right, so you would want to see now on the smaller time frame that, oh, okay, maybe there was this 1 hour candle that just went bullish. Sometimes price is going to go bullish, it will do a retest, and then you will take a buy, and then the price will go up. But sometimes prices are going to shoot up from resistance. There's nothing you can do about it. It's just the way how it is. And if you notice, the one candle went bullish with a lot of volume. Maybe this was some sort of news or market open or whatever, but there was a lot of volume here. And the next candles just started to make smaller body candles and higher highs and higher lows. And then you had this bearish candle and whatever, right? So let's move on to the next example here. So this exercise is just so that you understand how the overall smaller time frames, they build the overall larger time frames. As we go along, we're going to do a full-fledged chart workout where we will do a little exercise and to see who wants to take buys and who wants to take sells and this and that. So there's going to be a lot of information there. Okay, so over here what we have is we have the 1 hour chart. We have over here the 30-minute chart, and then we have here the 15-minute chart, right? Perfect. Now, just by looking at the 1 hour, right? Just by looking at the 1 hour, if we were to say that price has to go down, we're anticipating on the 1 hour for price to create a lower high and a lower low, right? On the 30-minute, also, we're looking for price to create a lower high and a lower low. On the 15-minute, we're just a bunch of candles forming whatever. Let's see what happens here. So the 1 hour candle, it went up and then it went down. Now, if you're talking about static risk, a new trader can say, okay, well, I just used 2% right over here, and then my stop loss was up over here, and price went down and took profits, and everything worked well. Someone who's experienced, they will say, okay, well, I'm going to use a dynamic risk. And with dynamic risk, you're splitting your positions into multiple positions. Like, let's say you are taking maybe 1% here, you're adding another 1% here, you're adding another 1%, a total of 3% now, but your stop is always the same. It's above the previous candle, a couple pips above the previous candle. Right, so now let's see what happens on the 30-minute, right? Because we're going to break down this 1 hour candle into two 30-minute candles. Check this out, right? Even though the 1 hour candle had an easier time coming down, the 30-minute candle actually went bullish first before the next one came down, right? So see how on the higher time frame you get much stronger confirmation. On the smaller time frame it can sometimes confuse you a little bit, right? But the 30-minute also respected the previous highs. Now if we look at it on the 15-minute time frame, you will see that the 15-minute closed like this and closed like this, and you're like, oh man, I don't know what's going to happen, because if you have only this information available, right? If you only have let me just get my marker back to blue. Let's say if you only have this information available, you don't know where the price is going to go, right? I mean, we don't know where it's going to go because it's a smaller time frame. It's giving us weak confirmations. This doesn't make any sense. So that's why we're looking at the higher time frames, because the higher time frames will tell us where price is going to go. and then eventually it starts to go down, but like on the 1 hour, it was much, much cleaner. On the 30 minute, it was a little bit dirty. On the 15 minute, it was just like pretty garbage, it was pretty hard. Let's take a next example right over here. Right. So when we're looking at this 1 hour candle, we're expecting the next 1 hour candle to continue moving down, just like all the other examples we've been doing. And the 30 minute as well, but it seems like it's kind of like rejecting. We don't know. We're not sure, because now on the 15 minute, you can see the candle is closing bullish. On the 15 minute, if the candle is closing bullish, it may seem that it may start to go up, because now it's giving us some weak confirmation. So let's say what happens on the 1 hour time frame. So the 1 hour candle closes bullish here as well, right? So if we drop it down to the 30 minute, on the 30 minute actually went down. So take a look at this. 30 minute went down to create a low, which was the low on the 1 hour. And then the next 1 hour, it broke the previous 30 minute high and it continued moving bullish. If you look on the 15 minute was just a mess. Right? So this is a great exercise to break down the small time frames into higher time frames and noticing how you're going to anticipate different moves to happen. Let's take a look here. All right, perfect. Things are good. Things are working good. Let's just remove these things and let's go to the next. All right. We have the 1 hour candle that's closing bullish. We have the 30 minute candle here. Now the 30 minute candle, this one closed bullish with no wick on the top, but the next one went up, but it closed bearish with no wick at the bottom. So now there's a 50-50 chance whether the next 30 minute candle will go up or it's going to go down, right? Because the candle closed with no wick. Looking at the 15 minute, maybe it created a support. It went up, it created a resistance, and then it started to reject that area. So now we want to look at the 1 hour and see what's going on. Now on the 1 hour, the best possible scenario could be that it may respect the previous low and continue moving up to fill this wick, right? Which it happened, but it didn't make sense on the 30 minute because the 30 minute candle closed like a bearish candle, like it gets pretty hard. So the 30 minute actually did go up, and the next 30 minute just closed like a doji-ish bearish candle. So looking at the 15 minute, I think 15 minute provided some sort of information, but it was still risky because it's a smaller time frame. So basically, we did create a support over here, and then we continued moving up. But I think this will be based on a lot of, I'd say, experience. Yeah, it's going to be based on a lot of experience here. Right, so on the 1 hour, it made sense. It was clear. 30 minute was a little dirty. 15 minute, it took a lot of candles to form. So it was kind of like difficult here. Could you have entered a trade on 30 minute when it broke the high over here? Yeah, I could have entered a trade right over here, but then I have to see how big my stop would have been. If it would have been a bigger stop, then I would have probably did it. All right, we have candles moving bearish right over here. So, I think we lost a stream here. Let me get this back. And it is right here. And we're still recording. Perfect. So now you have the 1 hour candles that are closing bearish, right? So now when you're looking at this 1 hour candle, it makes sense that it might continue going bearish. So let's see what happens here. Ooh, wow. It closed like a bullish candle, right? It closed like a bullish candle, making a lower high, but essentially also creating a support, right? Let's see what the next one does. Ooh, see the 30-minute? 30-minute is still, now 30 minutes creating a support, but the volume of the bullish candles is pretty low. So looking at the next 15 minute, 15 minute just started ranging it. So see how on the 15 minute, it's a lot of information, but it's a lot of range happening there too. But on the 30 minute creating support, this is also a support, so we're not sure what's going to happen here. So the next 1 hour comes down. So now we want to break it down into the 30-minute time frame and see that how you could have caught this move, right? Maybe a position under this wick, who knows, but there was no retest. So let's take a look at the 15-minute here. 15-minute also, because like price did move up, price did move down, sorry. The candles had no wicks at the bottom, but price still continued to move down, right? So this is an example where when you see candle closing bearish with no wick at the bottom, you're like, well, there's a 50-50 chance price may continue up or down. So this is the battle you have to fight. Now you have to say that, okay, do I want to enter at this point, or do I want to wait because candle closed with no wick, or do I want to be safe? Being safe in trades is very important. Let's move on towards, we have the next topic of this. So this was the breakdown of smaller time frames into like higher time frames. Like we were breaking down the higher time frame into small time frames. So now what we're going to do is we're going to move on to another topic called candle trends, and then